Thank you for joining us at XM.com for this Forex Preview video. We'll be looking at the U.S. NFP Jobs report out on Friday. I'm Cristina Marujos, and joining me today is investment analyst Cristina Parthenidu. So the August release of the ISM manufacturing PMI was quite disappointing yesterday. How can that report be linked to Friday's jobs report data?
Definitely the ISM manufacturing PMI is a negative warning for Friday's jobs data. The indicator fell below the 50 neutral mark, signaling that the U.S. manufacturing sector is officially in contraction after 3 years. And more importantly, we saw surveys employment index falling below that threshold too. So probably the U.S. labor market has started to feel the pain from the trade war. But this wasn't completely unexpected since the U.S. is directly affected by its own trade policies and China's reactions, so a persisting weakness in industrial activities are pretty much awaited as trade tensions escalate. Now about Friday's data, we expect another slowdown in employment, a slight pullback in wage growth, and a steady unemployment rate at 50-year lows, which will overall show that the U.S. labor market is still healthy and consumption supportive. However, after the ISM disappointment, negative surprises cannot be ruled out, meaning that a sharper slowdown in GDP growth in the third quarter cannot be excluded as well.
Now let's have a look at the Fed, because markets are convinced that the Fed will step in and save the economy by cutting rates a second time this year, especially after the exchange of new tariffs between the U.S. and China. Now, do you think the jobs report out on Friday could help the Fed make a decision towards another rate cut?
Well, probably not. I mean, the main threat for the U.S. economy is currently its own trade policy and China's response. So whether Friday's jobs report will come better or worse, the Fed has no other option but to push interest rates lower and even think more seriously about to restart a quantitative easing to correct the damage from the trade aggression. But we shouldn't forget that inflation control is the most important mandate for any central bank, and the only way to track inflation pressures is to look at the data. So Friday's jobs report may not be completely ignored, but rather used by policymakers to determine where interest rates will go later in the year.
And taking all of this into account, how do you see the dollar performing this week?
Well, the risk of sentiment in the Eurozone and the Brexit uncertainty shifted some demand to the dollar, but against safe haven currencies such as the Japanese yen, the dollar remained mostly stable and is likely to keep the sideways move, as markets are certain that a quick solution to the trade war is currently impossible and a rate cut is a done deal later this month. However, what markets are still debating is how dovish the Fed could get as we move ahead in the year, and that gives some room for volatility later on.
Cristina, thank you for joining me today, and thank you for watching us at XM.com.